Welcome back. Here watching Prime Property. Last week we got ICICI Bank to give you all tips on how to improve eligibility criteria for home loans. Those are valuable tips, and in case you missed it, here's a quick recap.
See, in terms of eligibility, depends on the tenor of loan you are seeking. Your eligibility can go up because your EMI burden can come down because it's a outflow on your monthly income. The other is if you are able to include a co-applicant who might be earning, can improve your eligibility. And third is if you have any other sources of incomes like rental incomes and other things, you should bring that up to the lenders and explain that and give proof. So I guess if you are able to give a complete family income, because many a times the home buyer is the family is buying the home. So instead of being a only applicant, bring in co-applicants.
You can also catch that entire interview on YouTube or on Twitter. And as promised, here's ICICI back on Prime Property with more tips. So you've already given us valuable tips on how to improve eligibility criteria for a home loan. Now I want to talk to you about when consumers want to switch banks. Very often they do want to switch their lenders, but it's a very cumbersome task. Why is that the case? And secondly, do you think that's ever a good idea?
Always it's a good idea for a customer to get the best rate which is available in the market. So I would never say no to that. But what I have increasingly started seeing is all bank rates are very competitive now. By and large, there is hardly any difference between a bank A, lender A and lender B today in the home loan market. So if you are able to get a better rate, do that. But I am increasingly seeing there is hardly any difference between most of the large players. However, when you balance transfer the loan, there are challenges of you have to again get the document stamped, so there are other charges which you might have to end up paying. You might have to end up paying the processing fee all over again. So one has to look at those issues when he's looking at balance transfer. But my recommendation would be, your existing lender would be more than happy because they will ensure today with the IBase rate, your rates are always the most competitive. Some people do also balance transfer because they might be wanting to get a higher loan in terms of top-up loan. So, you already have a property, let's say 1 crore, and your loan has run down to 40 lakhs, and you want to get a top-up loan. So sometimes people look at that as an opportunity to do balance transfers. But again, your existing lender might be able to give you the same top-up. So I am seeing increasingly the tendencies of balance transfers have started coming down in the market because all banks are reasonably competitive on rates.
Okay, so you advise against switching banks. Now let's talk about top-ups. We've got so many viewers telling us that top-ups are very, very difficult, that banks have made it a very cumbersome process. Why is that the case? You guys already have the collateral, you know what the income is, and consumers really need to top up their home loans, especially at a time of property registration. So why make it so difficult?
See, in terms of top-up, of course, banks will always look at the overall LTV consideration because as per the regulatory guideline, one is obviously your income eligibility should justify for the top-up one is seeking for. The other is in terms of the LTV has to be still met. So banks will obviously do the revaluation of the property and see what is the maximum top-up one can give on the loan. And yes, it is cumbersome. If home loan balance transfer is a cumbersome process because there is a lot of documentation which needs to be revalidated. Legal has to be filed by the new lenders. So my recommendation is, if you ask me even as a customer, go back to your existing lender and have that discussion because that is much easier today than shifting the loan because it's again a drawn out process. So, but if you are getting a significant better rate, of course you can take that pain of balance transferring the loan.
But at the time of a person applying for a top-up, and many times even during a fresh home loan, why is it that banks ask for documents that consumers can never get hold of? Things like the town and country planning department's approvals given to builders. Builders are never going to share that with home buyers. They agree, they share that with the channel partners, the banking channel partners. But supposing a consumer goes to a bank that's not a channel partner, how are they supposed to get these documents?
See, in terms of when customer is buying a property, it is very important that he should understand all the papers because as a lender they are approving a particular project for funding, the lender is approving it to ensure that his loan is safeguarded. Customer do take comfort out of it, but as a customer, it is as much important for them to check the papers themselves as well. However, to state it, most of the large lenders work with almost all the developers today, and they pre-approve the project. So, what we call as approved in advance. So the projects are approved, then the process of, getting all the property document clear is much more simpler. There might be some certain smaller projects where, lenders might not be there upfront. So there, as a customer has to obviously, check with the lender whether they can approve the project. So that might take a little more time, but most of the projects today, lenders make efforts to ensure that they pre-approve the projects in advance.
I would have to disagree with you over there. Some of the country's largest developers don't partner with all of the banks. So if a consumer decides to go with one of those banks, a non-channel partner bank, they don't get those documents. It's just not possible.
I think somewhere with the coming of this real estate regulation bill, I think that will get much more simplified, because as a developer, they are also required to get a registration code up, and they need to put up all that in the website. I guess all the initiative which this bill is possibly going to bring in will help a lot of that anxiety which you precisely stated about. And one is really hoping that the faster that comes in will really be good for the industry. But in terms of channel specifically, I don't think banks have bias to any channel, but if you see there are specific issues around that, customers should definitely escalate these issues.
Okay, so you think a real estate regulator is the solution, but we don't know when we're going to have one, especially given that logjam in Parliament. We've been hearing about a regulator for 10 years. But while we're talking about a regulator, and this is a new problem that consumers are encountering, real estate developers are citing financial problems. They started defaulting to banks. They are in distress. Banks have now started considering auctioning all of those properties, whatever they have, as collateral. For example, recently we saw such a case in Mumbai between LIC Housing Finance and a prominent developer. What are consumers supposed to do?
No, specific markets, as you rightly said, and certain specific developers, we do see some stress. It is concerning as a lender, as a customer, because it's almost all his lifetime investment he has put in buying this house. So one has to address this issue case to case and look at it. However, in terms of project completion, what we have seen, projects do get stuck because of various reasons, and if certain developers are not able to complete the project, lenders do get involved because their money is as much at stake. So again, it is worrying if there are specific developers where we do see situations like that, and one has to see how the situation evolves over time. What I am, however, hopeful is that the demand for houses are very large, and as long as the underlying asset value is there, many a times what happens, a developer A is not able to complete the project. However, the customers are able to bring in maybe together along with the solutioning other organizations to bring in players who are willing to take it up and complete the project. We have seen in past situation where a developer A could not complete, however the customers could manage to get in and eventually get another player who could complete. But yeah, it is a very time consuming and a very painful process at times. Okay,
so no clear-cut solution. Now let's talk a little bit more about ICICI Bank. Are you coming out with any innovative home loan products?
See, I think the product in this home loan market, in terms of products, the innovation today is largely happening around how well I can process the document, and a lot of effort is around digitizing the whole process of giving loans. How do you bring in technology more, I would say, is the bigger drive at this stage for lenders, because by and large the product is a very simple product. The interesting product to watch is around the women borrowers customers, where a lot of initiatives lenders are taking in. So I would say if I look at it, these are important. And as I spoke about, housing for all is becoming other big drive. So lenders are increasingly looking at how do you drive more loans around segments which are more around affordable housing and low-cost housing.
Okay, since you have brought up housing for all, I want to understand how banks like ICICI Bank going to provide home loans for the end users of low-cost housing, affordable housing. You know, let's face it, it's not easy to get a home loan. There's a lot of due diligence that is required. Banks like to see a steady flow of income, and the people that are actually going to reside in these low-cost houses may not be able to provide you with all the kind of documentation that is needed today. So how is this actually going to pan out?
Lenders have to evolve the model. One of the way to evolve under that program is also you do assessment yourself, which is an interview-based assessment. And what it would mean is that the cost of lending would go up because the processing cost of doing the loans will go up. But over time, if we are able to get this area evolved, you know, we see some of the micro housing finance increasingly getting at this space, but they don't have the ability to scale up beyond specific projects or geography. So lenders have to get in and have to build that whole model of how to service, how to assess these loans. But your point is very well taken, because that's going to be an area of work which all lenders have to do.
And with that, it's a wrap on this edition of Prime Property. Do remember, you can always email us your feedback, send us your viewer queries, or even experiences with developers that you may want to share. Our email address is primeproperty@network18online.com. You can also tweet me. See you same time next week.